Let's bring in the management of Samvardhana Motherson. It has posted a net profit of close to 830 crore rupees, as Puneet pointed out. Let's get in the management. In fact, we're joined by Pankaj Mittal as well as Kunal Malani of the company. Let me start by asking gentlemen about that global environment, which seems to have been challenging. What were the implications on account of that on the Q2 numbers?
I think we had highlighted this in the first quarter as well, that is probably going to be the lowest quarter of this financial year, in spite of all the volatilities that we were seeing. What gave us this confidence was the fact that we had already started working on many initiatives in order to take care of some of the volatility, whether on account of tariffs or some of the supply chain related elements. And at the same time, we had the tailwind coming from a large order book, tailwind coming from a non-automotive business, which continues to grow, thereby aiding both top line and bottom line growth. In April, actually, we had also highlighted some transformative measures that we had taken to reduce our cost structure, specifically in Western Europe and Central Europe. Which is what part of it that we executed during the last 2 quarters, and some more will get done. But the benefits of those have started becoming visible, and more of it will happen as we move through the rest of the year. On top of it, I think across the world, I think the tariff-related aspects have got somewhat clarified or somewhat clearer, resulting in everyone being able to take measures to work around these new world dynamics. And thereby, the automotive volume trajectory continues to be relatively resilient. On top of it, while the North American market on the CV side did go down, but with our diversified business model, I think we were still able to be fairly resilient even in the commercial vehicle space. So overall, I think the platform, the mix of businesses that we have, the mix of or the diversity that we have has all aided us to get to where we are. And we do anticipate that this momentum continues and H2 will likely look better than H1.
Okay, so H2 will likely be better, but margins seem to have been impacted by some of those challenges in global auto production. When do we see that double-digit margin returning?
Well, definitely there has been a impact of the changes in the models and other disruptions which have been caused with as we all know that EVs were growing, and then EVs are still growing but at a much smaller pace, and the customers brought in more and more hybrid models and ICE models. So definitely there has been an impact on account of that, and that's what Kunal mentioned, that very early in the year we had announced transformative measures to reduce our overall cost base also, and also transform our businesses to take care of all these changes and work along with our customers. And they have started to yield results, which we can see today. So mostly in the polymer and module division, we had taken various actions, and you see that on a sequential basis, our profitability is improving, although we are also still having certain costs which we have booked in, but much less than what we had booked in last quarter.
But Pankaj, specifically on the emerging businesses, was there something that impacted the margins in the quarter gone by?
Well, emerging businesses are a combination of many businesses put together. As you see, that there has been a very good growth over a period of time in the emerging businesses. They also include the merger of the bringing in together of Atsmitech business into it. And so it's a amalgamation and combination of all the businesses. And many of the new businesses in the emerging business side are, as you know, are growing. They are at a ramp up phase where we are growing at a very fast pace in high double-digit margins numbers. And therefore, the profitability will come in over a period of time in the, not far, but in the near future itself.
There's quite a bit of work, gentlemen, that's being done on CapEx as well. I just want to know in the second quarter what was done, how does that relate to the first quarter, and what's the plan in the rest of the year?
In the current quarter, we have done a CapEx of slightly over 1,400 crores. The previous quarter was 1,200, so the trajectory has gone up. Again, we expect H2 to look even further up. And this is part of the overall guidance that we had given, that For the year, we would be doing a capex of 6,000 crores plus minus 10%. We would likely to be at the upper end of this rather than the lower end of this guidance, driven by strong traction in many of our business lines, as well as expected capex that needs to happen on the larger consumer electronic facility that is due for launch in the middle of FY27. So we do anticipate that we would be in around our guidance, maybe at the upper end of our guidance rather than the lower, but we will still meet the guidance.
Okay. What about, and I'm going to end by asking you this. You mentioned that the second half is likely to be better. What are the factors that will contribute to this? Is it going to be the automotive side, where you're seeing domestic auto as something that a lot of people are optimistic on, or is it going to be non-auto for you?
That for sure. But I think more importantly, when you think from a global space perspective, one, we have seen that there is a greater amount of comfort around the tariff issue and its implications on demand is now a little bit more clearer. And that implication seems to be relatively muted. So we do anticipate that the volume trajectory should look better. Europe seems to have bottomed out from its production levels. So with some of the new launches expected in H2, we do anticipate that some of that volume should flow through. Also, I think the content part of the automotive piece of the business continues to do well, which should again aid a growth higher than the industry. And then you layer that up with the fact that our non-automotive business continues to grow much higher, and as they ramp up more, their impact on the profitability will start becoming more visible because they are much higher margin businesses than the automotive itself. And then you have the lead lag effect of tariffs, etc., which should kick in. You should have some of the transformative measure pieces for which execution is happening now would also start playing out in H2. So hence multiple drivers to give us the confidence to say that H2 should be better than H1.
All right, gentlemen, thanks so much for joining in and wish you all the best for that second half. Thanks so much for speaking to us.